Namaste friends, welcome to the channel. Today we will be discussing on Budget 2025 which was placed before the Parliament on 1st February 2025. There are many amendments in the budget. We will be discussing on important amendments, probably as per me, 6 amendments under the direct tax regime and 1 amendment in the indirect tax regime. Friends, the Budget 2025 is a very welcome budget. It is a step towards reforms and rationalization by the Government of India, and we'll be starting with the direct tax regime. And the first and foremost is income tax exempt up to rupees 12 lakhs. No income tax up to income of rupees 12 lakhs. Now there are certain things which one should keep in mind. Number one, this exemption of tax up to rupees 12 lakh rupees is only under the new regime, not under the old regime. The people who are still opting for the old regime will not be benefited out of it. Number two, income is not exempt. It is the rebate which is available under section 87A up to rupees 60,000 rupees or tax paid whichever is lower. 87A is not applicable or not available for income which is taxed at special rates like capital gains. So this is one other thing which should be kept in mind. And number three, income is exempt up to 4 lakh rupees. Earlier it was 3 lakhs. Now under the new regime, income is exempt up to 4 lakh rupees. So beyond 4 lakhs, everybody will have to file return of income. So it is not that if you are having income up to 12 lakh rupees, you don't need to file return of income, but you have to file return of income. Under the old regime, the tax exemption is only up to 2.5 lakh rupees. And most importantly, this rebate under section 87A is available only in case of individuals and having income up to rupees 12 lakh rupees. So if the total income is beyond 12 lakh rupees, rebate under section 87A will not be applicable and the tax as per the slab will have to be payable. Second important amendment is the classification criteria for MSMEs. The classification criteria for MSME has been revised upwards. So the investment criteria has been revised 5 times, whereas the turnover criteria has been revised 4 times from the existing limits, by virtue of which many enterprises will fall under MSME criteria now. And because of that, it will be beneficial. Definitely it will be beneficial for the MSME sector, but what is more important is disallowance under section 43B. So since many enterprises will now fall under section 40, under the MSME criteria, so people have to be more careful while making payments to MSMEs. Anything which is beyond 45 days will not be allowed, or there will be disallowance under section 43B. The third important amendment is under section 23 subsection 2. Earlier, if you have more than one house and one house is self-occupied, the other house could not be occupied for any reason, then the annual value was the presumptive rental income which the property could fetch. Now, and unless and until you prove that the second house is not occupied for reasons of employment elsewhere or for business elsewhere. Now the government has made it more simplified. They said that if the second house is not occupied for any reason, that will the annual value can still be taken as nil. So now the people can have 2 houses and one is self-occupied, one can still be vacant, and there will be no deemed income on the second house. This is again a very important amendment. Another important amendment has come under section 12AB and section 33 related to charitable trust. Under section 12AB, the registration to charitable trust under Income Tax Act was provided for a period of 5 years. Now it has been extended to 10 years in case of small charitable trust, which is having an annual income of up to 5 crore rupees. So it is a welcome step for small charitable trust. And the second amendment is under section 13(3), where specified person has been defined. So in the erstwhile, the specified person includes the relatives of specified person as well as concerns in which specified persons are interested. Now the 13(3) has been amended and relatives and concerns in which the specified persons are interested has been taken away with. So they are no more considered as specified person, and only the person who has contributed towards a trust up to rupees 1 lakh during the relevant previous year or 10 lakhs during the up to the relevant previous year will only be considered as specified persons. Taking forward the concept of Vivad se Viswas, the government has amended section 139 subsection 8A, that is related to updated returns. So where the SSC has failed to file return under section 139(1) or 139(4) or 139(5), or has failed to disclose certain income in their returns of income, they can update their return. Now earlier the return could be updated only up to 24 months. Now the time has been extended up to 48 months. So if you are updating the return, you have to pay a certain tax, certain percentage of the incremental tax as penalty or for charges for the updation. So earlier it was if it is updated within 12 months, then you have to pay 40%. If it is updated within 24 months, it is 50%. Now two more slabs have been added. If it is updated within 24 to 36 months, it is like 60% of the incremental tax. And if it is updated from 36 months to 48 months, then 70% of the incremental tax you have to pay along with the incremental tax, and your return is updated. Last but not the least, a very important amendment in section 72A and 72AA regarding brought forward of business losses and brought forward of unabsorbed depreciation. Earlier, the same was allowed for a period of 8 years, and in case of amalgamation of merger, a fresh life of 8 years was given from the date of amalgamation or merger to these losses, brought forward losses. Now, these sections have been amended. The period of 8 years will only be taken from the first year in which the losses or the unabsorbed depreciation was calculated. Even in the case of amalgamation of merger, there will be no fresh lease of life to these losses. So there was earlier the people used to evergreen these losses by way of amalgamation and merger. Now this evergreening will be done away with. But this will have a major impact in case of companies which is undergoing CIRP process under the IBC, where people were putting up resolution plan or bidding for the companies considering the brought forward losses and absorbed depreciation. Now they will not be able to get the fresh lease of life for these kind of losses. Friends, there are many amendments under the indirect tax regime, but I will be discussing only on one of the amendments which I feel is very important, that is amendment to section 17(5)(d) of the CGST Act. So there was a Supreme Court decision under Safari Retreats Pvt Ltd, wherein the Supreme Court held that in order to decide whether the building is a plant or not, the functionality test in each of the cases is important. And on the basis of the functionality test, a building can be a plant or not. And if the building is a plant, like in the case of a warehouse, then any goods or services received by a taxable services for the construction of such building, the input tax credit in term on the GST paid on such goods and services will be allowed. So the amendment has been brought in the budget, wherein it is now clarified that section 17(5)(d), instead of the word plant or machinery, it is plant and machinery, and the definition provided in the explanation to section 17, plant and machinery, which specifically excludes land and building. Hence, any kind of building, the input tax will not be allowed on the GST paid on goods and services received by a taxable services for construction of any such immovable properties. So, and the explanation has also been added to this amendment, where it is specifically mentioned that this amendment has been provided to overcome or to overrule any kind of judgment, decree or order, and plant or machinery will be construed as plant and machinery, and the definition of plant and machinery will be applicable. So it is more of a clash between the two pillars of the constitution, the administrative and the judiciary, and the amendment has been brought with a retrospective effect from June 2017, which I think is not in the right spirit, and it should be prospective in nature. But since the amendment is there, we have to abide by it. Thank you, friends. I hope you like this video and you find it beneficial. For any queries related to this, feel free to write to me or call me on the number provided in the description. And please don't forget to follow, subscribe and share the video for more such updates. Thank you. Jai.